Hi everyone, today let's talk about Jerome Powell and Jackson Hole once again. Then we'll quickly take a look at the economic data. Then we'll look at the charts, as well as my results for the day and my thoughts going into the Monday session. If you like trading stocks and options and making money, definitely like and subscribe. I make videos like this every single day that the markets are open as well as Sundays, so make sure you hit the bell so you don't miss out on any future episodes. Welcome to the Portfolio Bulletin. Let's get started. So starting off with Jackson Hole, it was a bit of a nothing burger, kind of like I expected it to be. I talked about in yesterday's video that I expected not much new information to come out, and he really said the same thing that he's been saying. They continue to expect higher for longer rates. If inflation goes higher, they will continue to raise rates, but it doesn't mean that we have to continue to raise rates forever. He did mention some positive data, which was also interesting despite mentioning that inflation is still too dang high. He also acknowledged that there could be some pain from the Fed's continuous efforts to bring down inflation, meaning that the economy is continuing to slow. We have seen that in the data. The job market continues to be strong, and he mentioned that as well. Overall, nothing really new here. To be honest, he sounded a little bit more dovish than I would have expected, and the markets didn't really care one way or the other what he said. Moving over to the calendar, Michigan 5-year inflation expectation ticked up slightly for their forecast. 1-year expectation also ticked up slightly, definitely interesting. Consumer expectations and consumer sentiment ticked down slightly from their previous forecast. Nothing crazy on the schedule, but it is interesting to see those inflation expectations ticking up just a little bit. Moving over to the interest rate monitor, you can see the probability of a pause ticked up slightly with today's comments, went from 79 to 82. We're still just over 3 weeks out, so it's a long ways away, but it is interesting. Slight tick up towards a pause. Previous week's probability was 90%, so we're actually a little bit down from there, but up from yesterday. Moving over to max pain for the day, absolutely you have to pay attention to max pain. Another pretty spot on finish. Max pain, I think it was 441 yesterday. We ended up just under that at 440. Max pain ticked down over the day's trading. Total options 1.3 million, put call ratio 1.7. Again, max pain definitely helping. We got a rally into the end of the week just like we'd been talking about. Moving over to the charts, starting off with the S&Ps on the hourly and the 4-hour. You can see that first candle was choppy, hit the upside level, hit the downside level, and that was basically on Jerome Powell's speech. There was just a little bit of volatility. After we hit this lower level, candle break, reversal to the upside, hit that next level, hit those EMAs at the end of day, so certainly in an area of resistance. But this rally throughout the second half of the day was pretty aggressive. And you can see now on the 4-hour chart, we have a low, higher low setup. Definitely interesting. If this comes up, hits that 55 and rallies through up to 445.49, we could expect a continuation rally on Monday. You do have to respect this as a higher low based on the end of day move. Moving over to the NASDAQ, you can see similar thesis, rallied into the pre-market, hit that upper level, fell on the comments, bottomed, started to chop higher, got above my 360 level, and then I kind of knew it was off to the races here into the end of the session. Pulled back a little bit from my 364.80 level. You can see through some wicks there. You also have the 200 SMA on the 15-minute chart, sitting at 365.71, so that's going to be a little bit of resistance there. Looking at the 4-hour chart, similar setup, low, higher low setup. If this ends up being a high, higher high setup, that could absolutely be a big runner for the NASDAQ going into next week. Certainly a possibility, and you do have to respect it coming off of that setup. It's also possible that this sets up a lower high and then we start to wedge sideways. Both are possible, and you do have to respect it. Moving over to the Russell, similar thesis, wick high, wick low, rallied back into the middle of the range, right on top of that highly traded zone, sitting around 184. Dow broke that level pretty dramatically yesterday, rallied into the pre-market, again, wicks to both sides, ended up closing above 434.23, which was my level. So you can kind of trade off of that. You're at the 21 EMA, definitely interesting on the 4-hour chart. Pretty tight stops with a potential for about a 1% move higher if it does clear that 21. Momentum bullish, volume picking up, definitely interesting. Overall, still looks okay. Moving over to Apple and Tesla. Apple tested that 21, started to rally, held that level, stopped right at my second level here at 178.85. If it gets above that level, you can look for a push up to 182.37. Tesla, we expected a test of that 21 EMA. That EMA continues to hold. We rallied off of that level. That was the trade setup that I was talking about yesterday, and it ended up working out fairly well. Did break it in the pre-market, so you kind of had to be careful with that. But definitely that 21 EMA was the trade for Tesla. Moving over to staples and discretionary. Staples, hitting the 21 EMA, hitting my level at 72.50. Rejected from that level. If it breaks and holds, you could look for a rally up to the next level at 74. Definitely interesting. You also have trend resistance just below that, as well as the 55 EMA sitting at 73.69. Discretionaries, similar to everything else, you have a low, higher low setup now. Didn't even quite get down and test that level. Looking for a rally back up to 166.78, as well as the 55 EMA sitting at 167.27. Moving over to breadth on the 50 and the 200-day averages, you can see we got an inside candle, pretty much just like the charts on the daily chart. Momentum on the 50-day average continuing to tick towards bullish, definitely interesting. We also crossed the SMA on RSI here for the 50-day average, also a little bit interesting. 200-day average did not engulf the previous candle, but it did look a little bit more bullish here than the 50-day average. Momentum still ticking towards bullish, not as aggressively as the 50-day average. RSI not crossing that SMA yet, but we did get a couple bottoms here at oversold conditions. It's starting to tick a little bit higher, definitely interesting. And both of these look a little bit bullish going into the Monday session. Moving over to the dollar on the 4-hour and the daily chart, you can see we chopped up, hit that 104.41 level on the Jackson Hole speech. Threw a wick to both sides, just like everything else. On the daily chart, ended up being a doji here. Momentum, bullish, overbought conditions now, definitely interesting. Still watching this as a rising wedge. This is the initial overthrow. If it continues to break out a little bit and then breaks down below this lower trend, that could be an absolute indicator that we're seeing the dollar push lower, as well as equities start to push higher. Overall, we saw a little bit of a move higher in equities with the dollar going up, so definitely interesting. Momentum on the 4-hour chart starting to fade slightly. RSI pulling back from overbought conditions. If that SMA breaks, maybe we see a little bit bigger dip down. Overall, the structure is still intact and it is still bullish, so you do have to respect that. Moving over to bonds, J&K got an inside candle, big red day yesterday, gap higher, inside candle today, similar to everything else, slightly bullish. Treasuries, 3 days in a row holding at this level, still below that 21 EMA. Momentum ticking bullish. Definitely interesting here. We now have kind of a left shoulder head, establishing maybe a right shoulder off of that 21 EMA. If we complete that pattern and we see a breakout above 96.50 here, start to push back up towards 100, that could be interesting. Be patient on this one. This is still very much a downtrend, but it is a little bit extended, and that might be an area for some opportunity. Moving over to the volatility indices, MOVE index pulled back once again, hitting that area of support at the 21 EMA, definitely interesting. Momentum still pushing lower. Almost an engulfing candle, still holding this trend line though, definitely interesting. Hit bearish momentum, RSI pulling back from the SMA, certainly could be looking for a bigger breakdown. You could also argue left shoulder head, right shoulder forming. And if we get a breakdown back to these lower levels, or even down to that 1177 area, that could be interesting. And that might be all she wrote for this up move in the VIX. Definitely something to watch for going into next week. Moving over to my accounts here, you can see I did fairly well on the session. No changes here to my IWM position. Still have that 183 call for Monday. Ended up making $5 on the day. Finished at 184, so I have about $49 of upside potential left in that trade. Looking at the Qs, I still have that covered call. I ended up rolling out from 161 out to 162, and I did that at pretty much the top of the market on that initial drive higher. You can see I captured a lot of that credit and then got it back as the market fell into the end of the session. As the market volatility fell basically throughout the rest of the session, I also took off most of those calls that I had going into the session before that end of day rally. So I captured just about all of those profits. I ended up adding a 167 call for Monday as well. Definitely interesting out here at $78. That's at my next level of resistance, but I do have a 161 put to counteract that at 73 cents as well. So I do have a strangle from 361 to 367, as well as those covered calls with plenty of credit left in that trade. Overall neutral on both of these. Let me know down in the comment section what you thought of Jerome Powell's speech today, or what you thought of the market rally in the end of the session. Definitely like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.